time for stock picks. Today we turn our focus on semiconductor supplier ASML, payment technology company Visa, and digital infrastructure company Equinix. And joining us to share his insights on these counters is Scott Cooper from Marriot Investment Managers. Scott, thanks so much for your time this afternoon. And let's start with your first pick, that being ASML, an interesting one and playing a crucial role in the AI ecosystem as it makes machines for companies like NVIDIA and TSMC to use to produce chips. Now, ASML, what you're going for in that AI industry, take us through your rationale behind picking this counter.
Yeah, thank you. ASML, great company. So effectively, as you mentioned, they make the machines that are used by chip manufacturers such as TSMC in order to produce semiconductors and chips. And they produce machines across the spectrum. But I think one of the really nice things about ASML is their high-end machines. So they're called extreme ultraviolet lithography machines. And to give you some idea of the capabilities, I mean, they etch patterns on the silicon wafers that are up to 10,000 times smaller than the width of a human hair. So a really integral component within the chip manufacturing space, and really important in terms of manufacturing higher-end chips as well. Certainly one of the things we like about them in that regard is that they are the only company in the world that is able to produce these machines. And they spent 30 years and tens of billions of euros on the R&D of these machines. And effectively, as you mentioned, NVIDIA might design the chip, contract to TSMC to manufacture it, but actually the machines that TSMC are using for that lithography are all coming from ASML. And combined with that market leadership, the monopoly, and also some of their aftermarket sales as well are three of the really interesting reasons why we're a fan of ASML at this point in time.
And let's talk about valuations for a bit, Scott, especially at a time where financial institutions are warning of an AI bubble. This on the back of the increased deal-making activity we've been seeing in the sector.
Yeah, very much so. I think one of the important things we're thinking about is that we certainly want to be exposed to the AI theme, as I'm sure everybody wants to be, but our main objective is to be sensibly exposed through companies that often are facilitating it rather than necessarily being the headline names. I think with that comes more sensible valuations, and companies that are perhaps not quite as well known, such as an ASML, whose valuation is not particularly cheap, but at the same time, when you look at its reliable earnings trajectory and the growth trajectory that we're expecting from the company, I think certainly with the likes of ASML, we're very comfortable holding it at this point in time.
And I mean, when you look at valuation, what is NVIDIA worth? Over 4 trillion at the moment. All right, let's move over to your second pick, and that being Equinix. Also in that tech sector, it basically provides the physical backbone of the internet and cloud computing through data centers, right? Take us through the analysis of that counter.
Yeah, so Equinix, probably the leading global data center provider. But aside from that component, there's two other components we really like about it. First off are the interconnections it can provide. So if you think of a data center sitting in Johannesburg, for example, it might actually house servers from 10, 100, 500 different companies. And that allows those companies to actually be very close to each other. So if you have, let's say, an online shopping or an online retailer that is sitting in the same data center as a Visa server and an F&B server, when you go to facilitate your checkout on an online purchase, the online retailer is able to very quickly talk to Visa, is able to very quickly talk to F&B, and just facilitates a much more efficient process. So that interconnections is a really attractive component of Equinix's offering. And I think the second is the fact that they do have this global reach. They've got 250 or 270 or so data centers globally. And that allows global players. So let's take a Netflix, for example. If you are streaming from Netflix, but it's coming from an Equinix server in Johannesburg or in Cape Town, you're going to have much more reliability and you're going to have much less latency and less lag than if you're effectively trying to stream from a server in the US. So for a lot of these big multinationals, Equinix provides them with that ability to get really close to the end customer.
Scott, how well placed is a company like Equinix when it comes to that AI story, considering that there's been capital deployment in infrastructure spend and that it holds so many of these data centers? Maybe then you can even expand on the competitive landscape and whether it holds the monopoly, the majority of that market share in that space.
Sure. So AI will certainly, and the increase of the likes of cloud computing and also quantum computing will all be beneficial for Equinix. There are probably two different ways that data centers can be constructed. So if you think the majority of Meta's or Alphabet's data centers, they will effectively build them themselves. And so Equinix often can partner with them in order to build this, but they also provide a lot of the more multi-use data centers. So certainly the market leader in the joint data centers, but in the same end, a lot of these big multinational tech companies will also be deploying on their own. But yes, as you mentioned, at the last results, another excellent set of results. I think it's now 89 consecutive quarters that Equinix have increased revenue. But they did note that they were going to be increasing their capex to about $4 or $5 billion a year, simply to take advantage of all of the opportunities that these advancements in AI are providing them.
And your last pick, a theme I'm noticing here before we get into the last pick, is that the stocks that you are picking seem to be counters that hold the majority share in the industries they operate in. I mean, you'll correct me if I'm wrong. And that's the same with Visa, right? What's your investment case for that counter?
Yeah, so lots to like about Visa again. We added to the portfolios about 5 years ago, following a sell-off on the back of COVID-19. Exposed to over 200 countries, processing over 100 billion transactions globally in any given year. And as you say, if you think about what we're trying to do as investment managers is to produce reliable outcomes for investors and choosing companies that are able to grow their earnings, to grow the dividends through the cycle. And if you think about the likes of the market leadership of an ASML and Equinix, a Visa, what that really allows them to do that is to produce those results through the cycle. It's obviously been an incredibly volatile 5 years for markets. We had COVID, we had inflation from the Great Reopening, we had one of the fastest hiking rate cycles from central banks globally, and then you add that to the likes of tariffs, Liberation Day from Trump. I think really one of our core focuses is selecting companies that are able to produce reliable outcomes regardless of all of the macroeconomic events that are going on at a given point in time.
And just quickly before I let you go, let's put Visa up against Mastercard for a second. From a market share perspective, a global presence, it seems like Visa is faring better. But then when you look at innovations and the move into fintech, Mastercard seems to be doing better on that edge. Just your analysis, your thoughts around that.
I think they're both great companies. When we first started looking at Visa, kind of going back to 2017, 2018, one of our main questions was whether they could move that past being simply a card provider and move into this fintech space. And actually, I've been incredibly impressed with Visa in that regard. Very, very front of line, even at the moment in terms of looking to innovate with AI, looking to innovate with stable coins. But what we really realized when we looked, kind of peeled the layers back on Visa, was that they looked to own the rails. And so when they went to speak to a fintech, you're kind of going, we're not competing with you. We're going to provide the infrastructure in the background to allow you to build your additional services on top of that. I think that was one of the real things that made us think that Visa was at a lower risk of disruption than otherwise people might have thought, and was one of our main cases for wanting to include the company in our equity portfolios.
All right, let's leave it there. Scott, thanks so much for your time and sharing your insights with us this afternoon. That was Scott Cooper from Marriot Investment Managers.